Europe's bond exchange traded fund market is worth $153 billion, a market dominated by BlackRock, with investors pouring around $9 billion into bond ETFs in Europe, the Middle East and Africa this year alone. And new European Union rules may boost the product's popularity by making trading volumes more readily available. So what are the flows currently looking like? We're joined now by Rob Powell from BlackRock. Thanks very much for coming in. As I say, this is a huge market and it just continues to grow. And by the looks of things, regulations could make it even easier to grow.
Absolutely. So we've seen the ETP market on a record trajectory this year. So we've seen about $33.5 billion going just into European ETFs this year, which is a record for this time of year.
In terms of the exact place where that money is flowing, this is the key. This is what investors want to know, is where, if they're looking at ETFs, where should they be looking at in terms of geographical expansion?
Well, on an asset class basis, first, equities have been on top this year. So equities ahead of fixed income, despite the long-term trend of positivity that you mentioned at the start. With regard to geography, the area which has seen the most focus this year is certainly European equities. And what's really interesting is that over the last month, US investors have allocated more to Europe than European investors through ETPs for the first time since October 2015.
This is an interesting state. Does that say more about the European people in terms of Europe are closer to what's happening in terms of European politics, or does it say more that US are not comfortable with investing domestically?
So there's probably a combination of the two. What we generally see is that US investors move into international equities before European equities. So at the start of the year, we've seen lots of flows into EFI type exposures, which include or have large amounts in Europe. So EFI is around 60% Europe. But when they start buying Europe in scale, we have seen in the past significant upticks in terms of inflows into European exposures.
And how has the political upheavals, be the US, be Europe with the French elections, be the UK with the upcoming UK elections, how is that playing out into what you've seen? So
the last few large political events, the large geopolitical events within the markets have led to very large flow volumes. So if we look at US equities just after the US election, they were taking a very high proportion of the total market flows across all ETPs, so 150% of the total flows, so over 100%. And the same's been true in Europe. So since the first round of the French election, when markets viewed Emmanuel Macron's performance as positive, we've seen large amounts of flows going back in. So geopolitical risks, or geopolitical events rather, have led to large flows recently.
I mentioned at the top there, Africa, Middle East. You say Europe is where we're seeing a lot of money flowing to. Are they starting to pick up those areas, or what are we seeing?
We've seen less amounts of money going into African and Middle East ETFs, partly because there's a much smaller product set.
Is it an area then that people just ignore because it's a smaller product set, or is it because they're uncertain about the politics surrounding it, the market environment that those areas have?
I would say it's all about access points, and with the fact that there's limited options in the ETF space, people are potentially accessing those markets through other vehicles.
I started off by talking about the bond market. You're saying it's equities that people are going into. When you're looking at investing and choosing bonds versus equities, what should people really be considering?
It's all about your objective and how positive you are on the potential returns of the asset class. So with many of the geopolitical risks alleviated in Europe, we've seen that focus on European equities. So it's all about weighing up the level of risk and adjusting your asset allocation accordingly.
Next 3 months, what are we looking for?
We think this could be the start of a large inflow period for Europe. We've also seen large flows into emerging market equities against many people's expectations following the US election. So look out for flows into risk assets such as these.
Okay, well, thanks very much. Rob Powell there from BlackRock on where the money is flowing when it comes to ETFs.